Hello everybody and welcome to the midweek market update from Smack the Markets for the 22nd of July. So as the week has progressed, it's been a very light news week. We've not had many major announcements, but nevertheless we've had an increased influx of volatility, mainly on the back of developments around the coronavirus and vaccines, vaccine development, and in particular the rising tensions between the US and China. Well, not just the US, but China and many other locations, including the UK and Australia as well. So let's take a look at how the markets fared that we discussed on Monday and some of the opportunities that we're looking at going into the second half of the week. Now, if we take a look at the Dow here, let's zoom this in on the 4-hour chart, because Monday, what we were looking for was strength here, if we could get some strength, and looking for a breakthrough this trading window from 26,600, I should say, up to around that sort of 27,000 level. Now, the market did manage to break through and started to make a move on this. Last week, or the tail end of the week of last week and the beginning of this week, the market was sort of consolidating around these two levels, if you remember, and looking quite nice on the daily time frame. So we managed to have the breakthrough. Market didn't quite make the 27,000 level, and now we've had quite a change in flavour here, and this is on the back of some renewed tensions with China and that sort of negative rhetoric sort of coming through. So from a perspective here of trend, the market is looking sort of rather sort of perilous for the long trend on the day, on the 4-hour time frame. On the daily, it still looks intact until these lows here are taken out. So from an intraday trading perspective, what we're looking at is these trading windows. So we've got 26,600, 26,500 to the short side. Below this, we've got that 26,300 as well, and then 26,200. Now, these levels and these zones have been tested multiple times, particularly these two lower levels down here. So if we get increased negative volatility in these markets, we wouldn't be at all surprised if we start to see some of these lows get tested later in the week. If we come across and take a look at gold, though, gold has played out sort of quite spectacularly, and it all happened yesterday. So the market's sort of coming off a bit at the moment. Again, what we were looking for was long opportunities on gold. In fact, we managed to get positioned on gold on a 15-minute time frame in the trading room, and held through to, well, not all of this gain, but held through to 6 targets. We didn't manage to pick the top. The market continued to go a little bit further, but nevertheless, it was a nice profits to book at the time. So gold is now sort of pulling back, and not just gold, but silver as well. And I think both of these markets, from the longer term perspective, the easy analysis is that they're likely to be significantly higher in years to come. So it doesn't make it any easier to trade these markets, because they are very sort of choppy, and getting positioned is the key. So timing is the key for these markets. Now, one thing we could look at here on gold and silver is the retracement. So you can see that everything's really extended at the moment on these higher time frames. So possibly pullbacks into the moving averages, pullbacks into sort of levels where we've previously had resistance, are certainly areas where we're going to be interested in potential turning points, and that brings us back into around 1825. So that's a long way for the market to come back, but these are some of the areas where we'll start to look at potential support for the market. There doesn't seem to be an awful lot in between there. Now, other markets that we discussed on Monday were the Aussie dollar. The opportunity here, well, let's have a look at this on the daily. The trading window here from the 70 level, breaking through that 70 level up to the sort of 72 price point, we can see that the market's actually done that now. This is on the back of a weak dollar that's been broken its sort of 11-year trend line now, and now is no longer in a bullish trend. So if we have a look at the Aussie here, this has now sort of played out sort of very nicely. Pullbacks on this market as well as many other Aussie markets, could be areas of interest for potential opportunities to get positioned. So again, similar to gold, retracements into support is and back into moving average geometry is the sort of things that we start to look for, and sort of areas for retracement targets. Similar, the Euro Swiss we discussed on Monday as well. Now this one hasn't actually picked up an awful lot of movement since Monday, but we're still liking this long. Again, if you recall from the analysis, we're looking at a potential turning point here and looking for the target level up here around that sort of 108.30 area. So this one still seems to be building. We're still getting this sort of consolidation, so still looking nice to the long side. Similar markets that we're looking at going into the second half of the week is a little bit spoilt for choice of late. There seems to be a few developing, but some of these more longer term ones like Swiss yen could be ones of interest, particularly if we start to look at this on the weekly timeframes and these higher timeframes. You can see that the market's been within the context of a long trend. It's now sort of breaking out of structure here. So getting above these levels really starts to put the market into much sort of bigger trade potential sort of trading windows to the long side. So we're keeping an eye on these sorts of markets, because pullbacks into breakouts, pullbacks into these levels could give us opportunities for positioning on some of these markets. So there's a few markets there that we're keeping a close eye on in the trading room going into the second half of the week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.